Hi guys, this is Martin from livemarkets.live. Welcome back to another edition of our analysis and updates on the forex markets. Today is the Wednesday, middle of the week. As was conveyed to you yesterday, that trading volumes will pick up this week, and it has happened. Yesterday we saw some very serious moves, especially in the GBP USD pair and also in the Euro USD pair. So first of all, we'll just take a look at the Euro USD price action. Now this is just a daily chart. Now it is on the daily chart that we normally identify the long-term trends, and we can see here that this is the trend here, down. So once you have known that the trend is down, you want to be down this pair. So whenever you're trying to trade something that is going down, you want to wait for some rallies and you sell them, wait for rallies, sell them again, so wait for rallies, sell them. But don't go for buying when the trend is down. So here the trend is down, and which is why we have been suggesting to our clients who are trading manually not to go long the euro dollar, even though interim we might see some move spikes against the trend. Now that the counter moves are all over, Euro USD is well set to move down to the pivotal level of 1.15. We've been eyeing the 1.15 level for quite a number of days now, over 10 days, 2 weeks. The reason why we have been eyeing the 1.15 level is just that there are some big barrier options that are there, and which is why if you saw the move down here, it got stalled at just 1.1510. Again, the next move down stalled at 1.1508. Again, the barrier guys took it higher. Now each time this move from 1.15 was lower, the initial retracement gave you more than 300 pips. Then the next retracement gave you 290 pips, and now again prices have turned down, and now we believe the move is underway to take it down below 1.15. There are two barriers. One is a 1.15, then there is one at 1.1450. The way the barriers act is, once they are disturbed, once they go below those levels, you would see the barrier option guys liquidating their positions, and you would see a reinforcement of the trend which broke those levels. So if it is falling, then the fall will accelerate towards the next barrier if it's close by. In this case, it's close by at 1.1450. This is a 50 DMA. We saw this test of it, got rejected, and therefore a second test of it, and then again got rejected yesterday. Yesterday was a big day. If you just zoom this chart a little bit, you know how there's this big candle here, and we broke below the lows of the previous day, and today we are below the lows of yesterday. So price action is very strongly positioned to take it lower down. In terms of CME volumes, the futures volume on the Euro FX futures, just take a look at now. This is Tuesday. This is April. You saw the data here. So this is the volume. There's an uptick in volume. As you can see, Monday was at 151,000, now 194. So move down with a volume which rose in line with that move. So obviously this move down was very much in line with institutionals and big money selling. So we are, and therefore it's just nice to know that we are on the side of the big trend players here instead of being opposite to them. A lot of traders were going long here to go for 1.18 and 1.20, and we kept telling them it won't come. You're just positioning against the big money, and that's never a good idea in forex. So be with the trend. Notice the volume data. This is a 1 day delayed data, but if you need live data, you can download a software called Ninja Trader, and you can open a demo account with them and just pull in the chart for the Euro futures or Yen futures or GBP futures, and then you can just get the live data for volume. So that's if you need live. We don't need live. We can just look at 1 day previous. We prefer to look at 1 day previous data on volumes. So that's on the euro dollar, very much in line with our analysis and expectations. Now this is the hourly chart on the euro dollar. It hit 1.14. Now you could keep debating on what is the importance of this level. In our view, it has no importance. You could keep debating. It hit this upper trend line, upper Bollinger Band, and therefore it turned. I can tell you hundreds of situations when it has never turned and it just kept going as well. So to say this is an important level and it turned down, etc., it just makes no sense, which is why we don't trade trend lines and we don't trade some of those technical pivots and all those things. They're just useless because they half the time they work, half the time they don't. So to us, what this whole area between 1.1730 to 1.1760 was an area of supply. That's the way we look at it. The reason why it's an area of supply is that it is a level previously when the pair turned down. It went to post NFP, it went to 1.1790 and then turned down. So we could see that this whole area is just a good supply region, and therefore anywhere it could turn down. And it just so happened that this turn down happened just before the New York opening, and we told you that once the US markets opens, the dollar index is going to rise. So that's the hourly chart. This is very bearish price action. There's a collapse here. There's been no retracement here this morning. We had a very mild spike to 1.160. I was watching that and we got rejected, which is why we opened one more at 1.165053. So we have a number of selling orders here. We have a number of one sell here. We have got a number of sells at 1.1680. So we ourselves on euro dollar is well spread out. We have an average of 1.1675. We're very comfortable. So this whole area collapsed and we're now getting into the second collapse. Where will this end and where is this headed? Well, just zooming this out, you'll know what's happening. Now the next area where this is going to find some support is at this area here, 1.1620 to 1.1610. That's where the price action turned on Friday, but we see this slicing through this. Now the reason why we see that this area will not hold is because if you look at the pound dollar, they move almost always together. Now if you see the pound, GBP USD, it sold off yesterday on Brexit worries, again the vote by the US House of Commons and May's position becoming increasingly untenable and she could be voted out. Traders are not going to wait for that to happen. They're going to price this in, and the uncertainty is just mind-numbing. They're just getting out of sterling as quickly as possible. So there's a collapse, and we saw that prices are now below the NFP daily lows, which is at 1.3120. So the NFP lows, just before the NFP, the lows have been cleared out. Now we're below that, 1.3105. On the euro dollar, we're still 25 pips away from this low here at 1.1620. Therefore, we see price of euro dollar 2 will go down to at least 1.1600. So that's what we are, and we're just looking at the comparable price action. They move together almost always. So Brexit is not just a worry for UK, it's a worry for the European Union just as much. So first it hits pound and then it will hit the euro. So this collapse, it's not yet done. We're going to see much lower levels. But that is just the euro side and the pound side. What about the dollar side? You see, the euro dollar is being driven down by two drivers. One, the weakness in the euro area, Brexit worries. Second, the extremely strong fundamentals in the US side. Now this is a dollar index. This has just stabilized about 95. That's very bullish, 95. This was a level that kept on capping previous rallies. We saw the fall here, we saw the fall here. But this time around it looks very different because it's just stable. It's spent more than 12 hours, about 95. Soaked in a lot of sells. A lot of people are trying to sell it down. It's not really going down. That's very bullish, and once it goes free about 95.3, I think there will be a lot of stop orders that will be cleared up and it will hit 96 this week. That's our expected. 96 on the dollar index is 1.15 on the euro dollar. So we're very tempted to keep our orders open till 1.15, but the way the model is structured is going to get out at 1.16 and re-enter again, probably at 1.1565, a little lower, once the support area has been cleared. So the dollar index is this is just the hourly chart. I can show you the 4-hour chart as well. It looks very solid. Those who'd like to look at the trend lines and all, well, here's a trend line. It's just, if you zoom in a little bit, you can see a little longer line. Now there's a very powerful, this is the January, this is the April trend. It's just started, still alive, and when you see this kind of a move, you can always bet your money that there is a huge move coming upwards. It always, I mean, this is with near certainty we can say here that this is not how a trend ends. There is almost no chance of this going down here. The reason being, this kind of trend is pushed, this kind of trend is normally pushed higher by big money. Now this is the big money players here. They're waiting, they haven't made their money yet, they pushed it to this. You see, when you have trillions of dollars going in pushing this higher, their average price is somewhere at 93.5, and for them to get out they need a huge amount of, they need at least 9800 before they can, because if they try to get out here, in no time prices will be here, so they might end up losing money on this trade, and big money doesn't lose money. So we expect the guys who pushed it here to keep pushing this higher, hit the stop orders, and then it goes automatically higher. This kind of move will always result in a bigger move higher. So that's the uptrend in the dollar index. What's the bond markets? And we always look at the bond markets, as you know, the US 2-year yield, that's what normally is pushing the dollar higher. Someone asked us a question, the long-term uptrend in the US 2-year, this was at 1.33 and it's hit 2.6 in the last 12 months. Now that's a huge move. Shouldn't the dollar have been at 105 by now? That's a very valid question. We've been debating that question for some time. This is the first time we've seen the dollar index so underpriced compared to the bond markets. As you know, spot forex almost always follows short-term rates. Short-term rates are rising, the dollar, the currency of that country will also rise in tandem. But this is the first time. If you see, the dollar index over the last 1 year has been fairly subdued. It's fell down, but all this while the US 2-year was rising, that this was falling, and now it's already come back above. It's got a lot of catching up to do. The reason why the dollar has been going against the bond market is because traders have been uncertain of what Trump is up to, and the Donald Trump factor is what has stopped the dollar from rallying to 105 by now. You see, he has been imposing tariffs, and he has been causing a lot of nerve-wracking issues for a lot of people around the world, and it's causing great amount of concern for traders, and which is why they haven't been able to push the dollar higher. That could change, that could change, because if you look at the latest Putin-Trump summit, it's been absolute disaster for Trump, and traders are betting from now on Donald Trump will be on a leash. He won't be allowed to speak his mind, he won't be allowed to say what he wants and do what he wants, and that's very good news for markets. You see, markets like certainty, they do not like continuous disturbance and tweets and tariffs and aiming at other countries and hitting allies with rhetoric. So it might just be a good thing for traders if the Trump is controlled a little bit. So that's a US 2-year. It just rose about yesterday is a big day for it. It rose 2.624. That's 20 pips higher, which is a big thing in the bond markets. What about that USD JPY? Now, as many of you know, we have been very bullish to US dollar to the yen. That is USD JPY. It was 109.4. It was here. We were suggesting to clients to go long, and there is a little bit move higher, and I think this trend is now coming to an end, probably somewhere at 113.5. the reason why we say that is because if you look at the volumes on the CME market, yesterday the USD JPY pair rose from 112 to 113, 112.8, but that wasn't coming with well, it did come with good volume. It did come with good volume, so that's my mistake. So USD JPY could move a little bit higher to 113.5 because yesterday too was good volumes, but there could be a correction somewhere around 113.5. The reason why we say that is because if you look at the Euro JPY, now that's an important pair when you're looking at yen. Concerns in Europe, concerns in United Kingdom is going to drive the USD, is going to drive the yen a little bit. So if you look at the hourly panel on the Euro JPY, you can see that there is a clear break of this trend here at green. It's broken that many times, but almost always recovered. But you can't keep breaking this and then imagine and expect it to be going higher again. So this break looks to be a real break, and we could just fall to 131 and possibly this 200 moving average at 130.8. If that does happen, then USD JPY will find it difficult to rise anymore, or maybe 113.5. That's about it. So that's on. I don't want to say too much here. I think it's just a very simple trading right now. Go long the dollar. You go long against the euro. That's a choice pair right now because the euro is what is going to suffer the most. GBP USD. Well, much of this collapse is done. Where will this end? Well, clearly it is headed on to 1.29. It's 200 pips more. This is clearly a big rejection here, and that means new lows. To 1.29 is where I think it might just find some stability at place where I would like to go long actually. But again, we'll have to wait for those buy signals to appear here. But I won't be shorting GBP anything beyond 1.2980. That's about it. After that, I won't be shorting this. We'll be just waiting and seeing. But this is going lower as well. That's about it. I think I've covered almost everything. We have the equity indexes going for new highs. I think there is no trade here now. We were long here at 228. We did tell you to go long at 27.20. It's now well above those levels, pushing higher to 28.80 to 2,900. So that's it. If you have any more questions and about the trade that we are not in too many trades. We are in the Euro USD trade, and that should close at 1.16. That will add, and that will be good news for. And we'll be keep entering that trade every time it rallies. So best of luck. This is Martin from livemarkets.live.